Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index held just below the 97 level on Thursday after a volatile session supported by stronger than expected US labor market data. January's non-farm payrolls rose by 130,000, while the unemployment rate unexpectedly fell to 4.3%, suggesting the job market is stabilizing early in 2026. However, jobless claims came in higher than expected. Markets are now focused on Friday's CPI report for further clarity on inflation. WTI crude slipped below $62.8 on Thursday, giving back part of the previous session's 1% gain. Despite ongoing geopolitical tensions surrounding Iran, persistent oversupply continues to weigh on prices. The US has reiterated its preference for a nuclear deal while keeping military options on the table and increasing naval presence in the region, raising concerns about potential supply disruptions. Still, ample global supplies limiting upside momentum. Gold dropped more than 3% Thursday afternoon, falling below $4,920 and extending its sharp correction. The decline appears driven primarily by cross-asset deleveraging, as investors liquidated precious metals to meet margin calls and offset losses elsewhere. Interestingly, the sell-off came despite US 10-year Treasury yields falling to 2-month lows, suggesting the move was liquidity-driven rather than rate expectations shifting higher. Silver and copper also declined sharply, highlighting broad-based selling across metals. Yen came under selling pressure Thursday, slipping toward the 153. The yen strengthened following Prime Minister Sanae Takaichi's decisive election victory, which has boosted expectations of fiscally disciplined and market-friendly policies. Investors are also rotating into Japanese equities, anticipating stimulus measures that could support domestic growth and increase demand for the yen. However, strong US employment data may help limit dollar downside in the near term. January's robust jobs report reduced expectations for a mid-year Fed rate cut. Euro struggled to extend its rebound during Thursday's Asian session, trading in a narrow range near 1.187. The pair remains within reach of this week's multi-day high, but lacks clear directional momentum. Following strong US payroll data, investors scaled back expectations for aggressive Fed easing. On the other hand, growing acceptance that the European Central Bank may hold rates steady for the remainder of the year is providing some underlying support to the pair.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.